Hello all and welcome to our Mastering Compliance webinar. I am Geraldine and I work in the marketing team here at Connective. I would like to introduce you to our presenter Denise Martin, our Senior Compliance Manager here at Connective, and Kerry Pedersen, our Compliance Support Manager. Kerry will be here to answer any question you might have during the webinar via the question tab. Simply type your question and Kerry will do her best to answer it for you. At the end of the webinar, we will have also a quick question and answer session with Denise. So we will get straight into those key compliance tips with Denise. Over to you, Denise.
Good afternoon, everybody, and welcome to our compliance update. So we hope to cover off on a few of those regulatory compliance questions that you may have, and general compliance for best business practice as viewed in the eyes of ASIC. So it's an interactive session, but we may not get to all of your responses straight away, so we'll try to build some into part of the program. However, if we happen to miss some, we will respond to you on an email independently, if that's okay. So one of the requirements around your licensing, just bear with me a moment. One of the requirements around your licensing is that it's important that you observe all of those particular policies and processes that you should have in place. We're going to talk about the obligations for credit representatives of a licensee. So this will enable you to understand exactly what is under your control as a licensee or under your control as a credit representative of a licensee. We will discuss a little bit about national consumer credit protection, responsible lending and fraud prevention. We'll look at the training and education that's required around those. We'll touch on advertising, and again we'll talk about best business practices. So one of the things around your license, if you can remember back to when you actually applied for your license or renewed your annual compliance certificate, you had to review your policies. So you had to have particular policies and processes set in place, well documented, in case you needed to call upon those for your business process. Some of those policies are quite in-depth, and a lot of licensees had those created by independent legal or compliance companies. Hopefully you haven't just filed them away and you have actually reviewed the content on some of those policies, because some of those things are quite pertinent to the way you manage your business, the way you look after your compliance, the way you manage your credit representatives if you have any, or the way that you respond to responsible lending obligations under those policies. So it's really important to review those policies, because as the time period for every 12 months goes through, you may find that some of your business practices have changed. You may now have credit representatives, or you may have employees acting under your license. What you need to do is you need to review them. So just go through, and if there are no changes, then just edit the date on the front of the document so that you know that at the time of applying or renewing your annual compliance certificate, you know that you've done that particular job. One of the other things that are related to your policies and processes is that you need to have a register for certain things. Now, one of them is obviously for any referrers that you are going to do business with. Now, if you are a credit representative of a licensee, then you need only make sure that your licensee receives a copy of any referral agreement that you have set in place for a company or business that is going to refer clients to you. If you are a licensee, it is important that you hold this information on a register. That register should detail certain information around the referrer. The type of business, i.e. maybe an accountant's firm, the address and location of the business, contact details of the business, and also the person's name that are going to refer business to your business or your credit representative or self. It also needs to be dated, this document, and you need to review it to make sure that you keep that information up to date in case the referrers for that business change or you happen to decide upon not receiving any referrals from that business again. So you update your register to include that information. The information is actually that you are required to hold on this register is detailed within the policies and guidelines, and if you have a look at ASIC at the manuals under compliance, you will see exactly what we're talking about. One of those items too is monitoring and supervision of your credit representatives. So under monitoring and supervision, some particular licensees think that the credit representative is fine, they're suitably licensed, they understand their obligations, and that they can proceed with providing credit assistance based on their Certificate 4 and/or diploma. So one of the main implementation items that we have instigated within that particular policy is that we have created a number of learning modules. Some of those modules are to be repeated, so over a 12-month period, and some are just for first time. One of them that we've created is a responsible lending module. Now this is a module obviously designed around RG 209, which is the regulatory guide that ASIC created based on Chapter 3 of the Act. It details what your obligations as a licensee are in review of those particular credit representatives. So you need to make sure that you understand exactly how much information they can provide to consumers if they have full understanding of the responsible lending obligations. If those particular credit representatives also hold the relevant qualifications, so a Cert 4, have they provided a police check perhaps to you? Have you looked into their suitability for them to become a credit representative under your licence? With these learning modules that we have created, they are available on our website. So you can email compliance@Connective and we can send you through a link to that, and there is no charge for those. Your credit representatives and/or employees need only have a Mercury CA number and password to log into those. They can print a certificate at the end which shows their percentage, and then you will know whether or not they need some further training perhaps. I would also keep a register or a document which actually monitors the particular supervision and training that you have implemented for your credit representatives. For credit representatives of Connective, we do this here for them. So we issue out the learning, we ensure that they all complete that learning in a required time frame, and that they're all suitably licensed, so they have Cert 4 or diploma at minimum. One of the other policies that you need to look at too is your information technology policy. Now this can be quite in-depth, but it looks at the information that you have. As we are in an electronic world now, we look at everything from an IT perspective. How do we store clients' information? How do we retain that information securely? What do we do with manual documents if we happen to store that information on our hard drives? And do we back it up in any way, shape or form? So it's very important that you have a look at this particular document and you review your own information technology policy. Do passwords get issued frequently? Are they renewed after a period of time, perhaps every 30 days for a computer? It is important too that you understand that within that guideline of information technology that you back up your systems. So if you store everything electronic, and as I said we are in an electronic world now, you need to ensure that if there is a problem and your hard drive is stolen, or if it is rendered useless through a particular crash, have you stored your client data separately? We do this for you on Mercury, but if you wanted to access that particular information urgently, you may not have access to Mercury. Whereas if you have a particular memory stick or hard drive, an external hard drive with that information saved, you will be able to use another portal to gain the information and documents that you need to ensure that your clients are satisfied within, the parameters of that. I'd also look at standard virus protection for yourselves and for your business. So have a look at the virus protection that you currently have on your system. So viruses can come through at any given time, and it's really important that you ensure that you do as much as possible to safeguard the client data that you have. The clients value your opinion. They also value and trust that you will protect their information, so it's really careful and critical that you do this. One of the other policies is disputes and complaints. Have you got a register in regards to a dispute or in regards to a complaint? So having a look at complaints alone, it's really hard sometimes to work out, okay, what's a complaint and perhaps what's just a grizzle from a client. What's my client getting to? Is it something that I've created, or is it something that it's a lender issue? Okay, so it's really important to identify the exact reasons that the client has come to you. Now, looking at the dispute resolution programs, so if you are a member of either COSL or FOS, it is important that you ensure that you can understand the process that they have for escalating a complaint. So in the first instance, if you receive a complaint from your client or something that perhaps the client deems a complaint, that you address it as soon as possible. Respond to your client in writing if they have emailed you that or written to you in a paper format. I would also ensure that if the client gives you that particular complaint verbally, that you ask them to formalise it for you so that you can keep a record on their file and you can see that you're following through the process as per an EDR dispute. One of those issues that can relate to perhaps a complaint can be a non-response from a broker in regards to a question that a client may have. And it could be that there is a delay. You're waiting on a response from a third party, perhaps the lender. Maybe there is a valuation that needs to be created on a property. As long as you get back to your client and you do as much as possible in writing, you cover yourself, you will protect your business. And it's really important that you have a look at this as a mainstream best business practice. Okay? So responding to a client, at least they understand that you've received their concern, that you're going to address it, and you're going to address it in a particular time frame, that you've explained where perhaps the shortfall is. Is it the lender that's holding it up? Are you waiting on the valuation officer to attend the property? It's important that they're kept up to date, and that way then it can often be resolved before it becomes an escalation to your dispute provider. Now, if you are a licensee, your dispute provider will either be COSL or FOS. But if you are a credit representative, your dispute provider, you need to go directly through to your licensee. As a Connective credit representative, you would come to us. We always suggest that all complaints are lodged in writing because it makes it very clear, and you're able to interpret exactly what the problem is and break it down. So you can respond, and you can respond in a timely manner. Always record, not electronically record, but always record the information on your register. It's really important because when you renew your annual compliance certificate, one of the questions that you are asked is, have you received perhaps any complaints or anything that's going to be a dispute? So you need to understand that this is an integral part of why ASIC requests that we have an updated COSL or FOS dispute resolution provider and maintain that for the whole period of when we are licensed. Now, conflicts of interest. It's very interesting around a conflict because conflicts can be something that we don't really think is a conflict. If I'm perhaps doing a loan for a family member, that can be a conflict because there's no arm's length between myself and the transaction. I need to make sure that I put everything under responsible lending guidelines into this particular transaction. I need to ensure that I look at this transaction from an objective point of view, that I gather enough supporting documents that make sure and maintain that responsible lending obligation of which is my obligation under that component of the Act. A conflict can also be where I have a direct interest in a property. So I might be the seller or the purchaser, or in some way, shape or form I might have something to do with a particular benefit from the sale of that property. So it's important that you make sure that you detail certain things around conflicts of interest. So ensure that you have a register. If it is a loan that you're lodging and it is under your own name, you need to ensure that your licensee, if you are a credit representative, has full comfort in the details around that particular transaction. As a Connective member, it is important that you send through, if you are a credit representative under Connective's license, you send through an email to compliance@connective, addressed to the General Manager, just outlining the details of that transaction, just so we can get approval. As a best business practice, we would also strongly encourage other licensees to do the same, to educate your brokers and ensure that your credit representatives operating under your license abide and protect your business. So within a conflict of interest, you can also have a situation where another third party has a direct interest in the property or the sale. So it could be that there is a solicitor or a conveyancer that is going to work on behalf of both the purchaser and the seller. So that's not really affecting you, however it needs to be documented, just so that the lender is aware of exactly what is required around those particular transactions. It's just to ensure that there is an arm's length. Okay. Now if you have, under conflicts of interest, if you have perhaps a family member who is applying for a deal and they want you to manage that deal for them, apart from your compliance obligations around responsible lending, you need to ensure that the lender knows exactly what the relationship is. Okay, so just when you're lodging your deal, if you're going to have a discussion with your BDM prior to lodging that deal, just have a discussion with them, make sure you get it in writing that they approve that you can lodge this deal, being that you have a specific interest. Put down that you actually have done this particular process, and you have these checks and balances in place to ensure that you've done everything to abide by not only your responsible lending obligations but those that the bank requires. So under lender policy, they have particular guidelines about brokers lodging their own deals, for instance. If you're lodging your own deal, you need to be upfront about that as well. You need to ensure that all of your obligations are held, especially when it's just for yourself. So make sure you still create those documents that you need, your compliance documents. Make sure that you keep detailed notes around that transaction. Make sure that you have adequate financial information to support the transaction. If you are a credit representative of a licensee, the licensee needs to be aware that you're lodging your own deal. If there is a problem with the deal and the lender then contacts your licensee or yourself or Connective to discuss that, we need to be aware of it. So make sure that you let us know if you're going to do your own loan or you have a particular interest in that loan. Make sure that we know, send you through an email to compliance@connective so that we can make sure that that's on file and we're well aware. No point shutting the door after the horse has bolted. Okay. So in regards to just turning the page. Okay. So ensure, as I said before, that you actually have these policies. Don't just sign off and do a tick register on ASIC, because if you are a licensee and you're asked that question and then ASIC decide to do a review of your license requirements, and they are doing that, they will ask you to prove that. They may ask you for the register that shows that you have those policies, or they may ask for the actual policy. Now it could be as in a short form email that you need to respond. It could be that you just have a Word document. You might have it in a binder set up and separate, and that is fine as long as you have these policies in place. One of the things that we often get asked is, oh, ASIC are now going to review my licence requirements and I'm supposed to have a particular policy in place. What do they mean by that? Do I need to have a policy? Well, yes you do, because you've answered yes to ASIC. So make sure that when you're responding to those questions around your own annual compliance certificate, that you actually have the document. Ensure that you have that document. So whether it's a soft copy or a manual copy, ensure that it's there and it's up to date and that you review it. I would retain, whether it's electronically or manually, all of your compliance policies under the heading of compliance, so that if ASIC do happen to do a site visit, and we have seen them create one of those site visits from time to time, you can pull that out at an instant. Whether it's electronic or whether it's in a manual folder, you have it there at the ready. You have all of your documents that are required around your licence saved and as a duplicate or a backup made, just in case there is a problem. Okay. I would retain policies as a best business practice for editing as well, because as I said, when you review your policy, you might, if we're looking at credit representatives perhaps and the monitoring and training of those, you may now have 10 more than you had last year. So you need to ensure that is also covered. You can change the date and you can add anything else that you have implemented within that particular policy for your credit representatives. You need to read the policy documents so that you understand those obligations under your licence if you're a licensee. It's no good just having the document there without understanding what the actual implications are if something goes wrong around that particular policy. So read the document and understand your obligations under that. If you have any questions around your policy documents, you can either refer to the person who's created those for you, whether that be a legal company and/or compliance company, or, for instance sake, if it's a general question, you may refer to Compliance at Connective and we will help you out as best we can. As you can understand, Kerry and I are not from a legal team, but we can offer as much compliance support as possible. We liaise regularly with ASIC and the lenders, so we're well and truly up to date with different changes to legislation and policies. So as much as you can provide information under those guidelines and obligations for your licence, it's a best business practice. Okay, so under registers, we're just going to talk about registers for the moment. Now, registers don't have to be anything specific or fancy. They can be as simple as an Excel spreadsheet or a hand-printed document that you've created, as long as it is kept up to date with all of the information around those particular components that I've written down here. So referrals. So we'll talk about a referral here. So within a referral arrangement, a business or entity, someone who is operating as either an accountant, a real estate agent, a financial planner, so on and so forth, they can refer business to you and they are classed as a regulated referrer. Under that statement, they fall under the guidelines and that regulatory guide, which states that you must have a referral agreement in place, a formal, written, formal document in place. It's important that that document holds pertinent information to the person who's going to refer the client to you, and also what you need to do and understanding your obligations once that client has been referred. What information can the referrer give to me? Can they give me a packaged deal? And that is under no circumstances under the legislation can they do that. What they can do though is give you a name and a contact number or email address for that particular client once they have gained permission for that. They have a very short period of time to do that, and then once you receive that information, you also have 5 to 10 working days to respond. Now, the reason for this is so that we all lead busy lives, and in 6 months' time you come across that name and you haven't contacted the client. Well, in actual fact you can't now. So you need to make sure that you maintain that particular component so that you can contact your clients while the lead is quite hot. Okay? You don't want to have that client going to another broker and a deal walking out the door because you failed to act. Within that register we do have those drafted on Mercury. Within the referral component it asks for information, particular information, and you can edit that document to have that signed by one or both parties. The licensee needs to retain a copy, and if you're a credit representative of a licensee, you need to make sure that your licensee has a copy of any referrer agreements you have in place. If you are going to pay a commission or a flat fee to that referrer for the business, you need to stipulate that within not only that document but also in your credit proposal disclosure for the clients that it pertains to. It doesn't matter about the percentage rate, it doesn't matter about the flat fee, as long as it is disclosed clearly. And it needs to be very clear, as in a monetary amount. So you can't just put, I'm going to give you 20% of the deal. It needs to come down and be broken down to an exact or close to figure as at the time that you provide the credit assistance to your client. If you have perhaps a client that you have dealt with and they're really happy with your business, they're not a regulated referrer, they're just a mum and dad broker, a mum and dad client from the suburbs, and they're going to refer some family members to you to perhaps lodge the deal because you've actually dealt with him in a very good way and they love your service. The question is, do you need a referral arrangement in place? Do you need to disclose this on your credit proposal disclosure? If you're going to pay this particular person out of the commission from the deal that you tend to write, then yes, it needs to be disclosed on the credit proposal disclosure. If you're not, however, and you decide that just because, they've handed you a couple of clients or a referral, you might decide to give them perhaps a couple of movie tickets or, I don't know, take them out for dinner. If that's coming from your pocket and in no way is that going to be part and parcel of the commission that's being generated from that particular referral lead, then you don't need to disclose it. But if they are regulated, yes. So outsourcing. So having a look at your outsourcing policy. Is there any work that you outsource? Do you outsource your compliance requirements? Do you have someone independent, an independent company come back in and create your documents or monitor or review your compliance? Do you have someone who looks after your client database? Do they monitor that from perhaps an overseas channel or from a company within Australia? It doesn't make any difference. You still need to have an outsourcing policy. You need to have guidelines around what you're going to do and what your obligations are for you under your license or as a credit representative when you outsource information to other entities. You also need to have an agreement in place so that the person or the company who are receiving the information from you can actually act under and in accordance with our laws and obligations. How secure are they going to treat your data? So you need to understand exactly what that means. So reviewing your outsourcing policies is a best practice. You may only need to review that once a year because you don't outsource anything, and that's fine. Just change the date as long as you've reviewed that policy. Now, we've spoken on conflicts of interest, complaints and disputes, but I'm just going to touch a little bit more on the credit supervision and training area. Now, this can be also for yourself. So you might be the only loan writer in your company under your license or as a credit representative of another licensee. So what training do you need? Why do ASIC, you're qualified, why do ASIC state that you need to be supervised or trained? So what it is it's about being able to identify any changes that are made to either regulations or policies or procedures. Are you attending PD days perhaps? Have you done any related courses to the industry? So whether or not it's a diploma, whether or not it's Certificate 4 if you're just beginning, or if it is something perhaps a little bit more formal in the accountancy or financial planning field. So having a look at your own credit supervision and training. Okay. Do you have a policy, a credit policy? You don't actually need a credit policy because you don't provide credit, but you do provide credit assistance. And under that, you need to make sure that you have enough of a supervision in place to monitor not only your own work, but somebody else's, your credit representatives and or employees. So if you have an employee or a credit representative looking after clients under your license, what you need to do is just review a couple of their files. Are they up to your standard? Are they covering off on responsible lending obligations? Do they hold satisfactory information to ensure that that client is not going to be put into hardship? It's really important that you ensure that your credit representatives operating under your license are protecting your business. So although a credit representative lodging a deal or an employee lodging a deal is responsible under a component of responsible lending, RG 209, for lodging that deal and providing that credit assistance, it's your license at stake. Okay, so ensuring that you protect that under all circumstances will ensure that you continue to receive your income. Within that supervision and training too, as I said earlier, we have a number of learning modules that we have created around responsible lending, fraud prevention, and now the anti-money laundering and counter-terrorism module. We will be reviewing those from time to time to update for any changes to legislation if they refer to legislative terms. We'll also be creating new ones, so constantly have a look. These modules are free and they're available to you as the licensee and your employees or credit representatives. Some of those modules have been approved by the MFAA and accredited with CPD points accordingly. So it's another way that you can add points to that, that total that you need when you're reapplying or renewing your MFAA or FBAA. It's good to understand exactly what credit representatives understand about responsible lending. And you need to, as the licensee, be able to be comfortable that if ASIC asked you, if you had 2 or 3 credit representatives or employees operating under that model, that it's important that you can explain to ASIC if they ask what training and supervision you have in place, that you can detail that. Okay? Do I know my credit representatives? Do I enforce face-to-face interviews? You may not, but what checks and balances do you have in place to ensure that your credit representative is meeting a client or knows his client? When you look at original documents, so supporting documents, do you take copies yourself or do you rely on a scanned or an email copy? Now, when you look at the responsible lending obligations, it doesn't state that you're required to view original documents. However, as a best business practice, I would. An original document is less likely to be tampered with, whereas copies and or fax copies can be manipulated. Each time that a document is changed, it loses value, so you will see little anomalies on that document. Within your lender policies and guidelines, clearly they state that you must cite original bank documents, so bank statements. I would always, in every instance, ask for the original documents. It's going to protect your business. If there is a problem and that document has been created perhaps fraudulently, you will be able to stand with your hand on your heart and say, but this is the document I took a copy, I took a copy of this document. This is how I took it myself. This is how I saw that document. You can put your hand on your heart and tell everybody that you did as much as possible to protect your business. If you've only received an email scanned copy and it looks like an original, well, bank documents can change, and only the banks can verify the legitimacy of those documents. So unless you've worked for a particular lender currently, you may not be aware of the changes that have been made to those particular documents. So I would always, in every instance, review your original documents. So whether that be an ATO notice of assessment, a driver's license, or a bank document, a bank statement or transaction listing. It is okay to begin a deal and start that process, but you would really need to cite those originals or have a particular process in place to ensure what your particular policies are and procedures around non-citing of original documents. Protect your business is all I can say. We're getting to all of the questions, so I'd like to thank Kerry for doing that for me. That's great. So if we need to respond separately, we will get back to you through compliance at Connectives. Now, we've discussed monitoring and supervision of your credit reps. So I'd like to know, be interested to know exactly how many of you can actually answer this question. How many of you regularly review the loan files that your credit representatives have lodged? Have you actually looked at the content around disclosures, other obligations, dependents, and the most important, financials? Okay? Do not accept a loan file that only has financials for a particular home loan that's already existing. How do you prove the income? How do you approve any expenses? You can't. So you need to gather all of the financial information for your client under the Responsible Lending Guidelines of RG 209. Credit cards, personal loans, any other facilities, lines of credit, business accounts that are perhaps pertinent to that particular income. Make sure that you cover off on all of those documents. I would also make sure that those documents were as current as possible and up to date as possible. Often we receive files that state bank statements that perhaps are 3 or 4 months old, and that's fine because they may be issued over a quarterly period. However, your client will be able to provide you with perhaps an internet transaction listing or a bank transaction listing direct from the lender that can verify and back up that information. So it's important that you get as much information as possible to ensure that you're abiding by those guidelines, because that responsibility falls with you as the licensee or you as the credit representative providing credit assistance. Okay. Ensure that the best practices that we have talked about can be built into your business somehow. Look at what we do as a best practice that ASIC have confirmed and say, okay, well, do I do this? Is there anything that I need to implement perhaps or refine? Have a look at your business, your license, and just have a look at the outcome if something adverse had occurred and perhaps the lender had cancelled your accreditation or suspended you. What if it was multiple? It's your income. So that's what you need to secure, your regular income. Okay? To have best business practices isn't difficult, and it just means having a procedure in place that everybody within your business or company abide by. It doesn't matter whether you're a licensee or a credit representative. If you want ongoing business, you want people to see that you are a professional person, you have ethics, and this is the way that you do business. Often we will see that the client will come back and say, oh, I don't have to give this information to the lender. But in actual fact, lenders have different obligations under different acts, and they are more stringent than ours. So let's talk about responsible lending and NCCP. So the first point here I've made is knowing your customer. How do you receive your referrals, or how do your customers locate you? Is it through the web? Is it from a website, or is it from the local paper? Is it from a source at a football club? How are you dealing with your customer? Have you had an interaction on the phone, or is it purely by email? Unless you've met your customer at least once during that transaction or previously, you don't really know or understand their full obligations of what they need to provide to you for you to support your responsible lending obligations. Having a conversation with a client face-to-face can often show more than what they put down in paper or email. So if we look at an instance for best business practice, we reviewed a file where a particular licensee went out to provide credit assistance, and the client actually wanted to meet with the broker at a coffee shop. No problem there. When the contracts were all drawn up, the broker, as part of his policy, actually hand delivers those to the applicant, so the applicant, they can go through them, the applicant can receive those instead of by electronic means. On this particular day, when the broker actually showed up at the client's home, which was all pre-appointed, he noticed that there were children's bikes in the property, there were nappies on the line, and yet there were no dependents stated on the application. What that means is he needed to actually ask some more questions. Perhaps those questions may not have been covered off in your fact find or your client needs review. So be aware of the situations around how you're meeting your clients and knowing those clients to the nth degree. The last thing you want to do is lodge a deal and find out that a deal might have been lodged somewhere else previously, maybe 12 months ago, and there were dependents listed. So do as much as you can to ensure that you cover off on your best business practices. Again, reviewing a customer's financial situation. Many a time I've reviewed a file that has had a preliminary assessment with no expenses, none at all. Now, most people have a mobile phone. The majority of people will have a credit card. Most people will either be paying some sort of expense for general living. Now, yes, you do include those in your servicing calculator, but that's a separate calculator. So ensure that you're asking the right questions. Have a look and review your fact find. Your client needs review. Ensure that you're asking all of the questions around the client's situation. Are they perhaps changing jobs? Perhaps they don't have any dependents, but you can see that the partner or co-applicant is perhaps halfway through a pregnancy. Doesn't mean that the deal will decline, but you need to be upfront with the lender. You need to ensure that the lender knows the history of these clients, what's happening, what can you give, what information can you provide to fully support that deal. Once the lender makes the decision on the provision of credit, that's fine, as long as you've done as much as you can. As we've talked about with original supporting documents, you can always begin a deal based on perhaps a scanned or an email copy, but I would always cite the originals. I would ask the customer to send them through, perhaps via express post, or drop them off or pick them up at a later time, but prior to lodging that deal, because you need to abide by the lender policy obligations for you. You need to look at your obligations under NCCP. So Chapter 3 is responsible lending, and that is a massive component. You need to understand those obligations. A few times as a practice that we would understand, we have seen applications come through where the comments from the broker have been, oh, there's only loan statements in there. Did you cite original loan statements, or did you cite copies? Have you cited any other loan statements, or have you cited any other credit application documents? So credit cards and so on and so forth. What about the savings account? Have you reviewed those? The broker came back to me and actually said, It's not my obligation to do that, it's the lender's. Well, I'm sorry, but you work as an agent on behalf of the lender. It is your obligation under the financial area of responsible lending that you make sure you gather enough supporting information, you make enough inquiries to cover off. Okay? So minimise risk to your business in all instances. So we have been answering a few questions as we've been going. That's thankful to Kerry. If anyone has any last minute questions that perhaps they would like to ask, I've just seen one come up just in regards to a Skype interview, which I'll mention. So with Skype, that's an electronic means, and we're all moving towards this beautiful electronic platform. But what you need to do is you need to ensure that is the lender going to be happy with a Skype interview being a face-to-face? So it's not just about you, it's about is that covered under the lender's policy? Some will, some won't. What I would say to you is put forward a request on email to your BDM. Outline your process around interviewing a client via Skype. They may be in another state, they may work off-site. They may be overseas for a period of time. So what you need to do is cover off on your best business practices and ensure that that lender is happy with that. Once they respond to you, then you've got that in writing. You can save that to file. The other thing with Skype interviews is, do you have the ID in front of you when you're actually seeing the client on the phone, on the screen? Can you compare? Okay. So you need to make sure that you cover off on those particular things if you're doing a Skype interview. Make sure it is the client that you're actually applying for the credit for that you're interviewing. Make sure they're one and the same. And yes, we all change. Our photos change on our licenses. However, it's important to at least say, well, from my recollection, that was the copy that I had of the driver's license, and as close as possible, that's the person who I actually interviewed via Skype. Okay. If you are a credit representative of a licensee, you will need to ensure that you abide by their guidelines as well. So make sure your licensee knows. Okay. If you are a paperless office, we're going to cover off on this one. So in regards to retention of documents, especially for a loan transaction, it's a legal requirement that you retain all documents for a period of 7 years from the beginning onset of that particular transaction. Notes, financial information, applications, make sure that you keep copies. Can you store those electronically? Yes, you can. What you need to retain as an original is anything with the client's signature that's a legal document. A statutory declaration, a quote if you're providing credit assistance, and a fee. You need to retain the original in case it is called upon in a court of law. However, any document that has been issued to you that has a scanned copy of the signature, that's fine to retain as just a scanned copy. So you won't need to keep cumbersome files holding volumes of information. You can just retain a small amount on a memory stick. Make sure it is backed up. Make sure you have, whether you use Mercury or if you have your own client base, make sure that you cover off on that. Okay. As always, Kerry and I are here to provide any type of compliance support to you. If you receive a notice from ASIC, give us a call. We deal with these on a constant basis so we understand what's required. Review your documents, your compliance. Make sure that you've got adequate policies in place. And if unsure, just contact compliance@connective.com.au and we will respond accordingly. You can also ring. However, if Kerry and I are working off-site, email is the best way and we will always get back to you. Some questions, of course, we may need to seek our own further guidance on if it's an ASIC issue or something that we are unaware of. So please be patient. Okay. So what I'd like to say at this stage is thank you very much for your time. I know we've gone a couple of minutes over, but I really appreciate your attendance, and we will be attending all of the PD days for Connective, which are starting shortly. So we welcome you to come up and say hello to both Kerry or I, depending on which state we're in. And also we are looking at producing another round of workshops where they're small format workshops which are held in every state. You can look for more information around those. We will email you about those, and they will be on different topics. However, we will certainly be compliance held over with one of those or two of those within the time period. But we'd like to thank you very much for your attendance today, and look forward to dealing with you on another basis. Thank you very much.